Welcome to the Payments Trilogue, where 3 seasoned professionals discuss payments and more for Europe and beyond.
Hello, my name is Michael Sarmany, and I'd like to welcome you to another episode of the Trilogue. And this time we'd like to look at the A2A payments. That's account-to-account payments. So basically one of the alternatives to cards, where the money moves directly from my account to you without having to type in 16-digit numbers. The money is moved instantly, irrevocably. So that's really attractive for a lot of people. And we've seen a lot of success of that around the world. Brazil and India, very famous use cases, but also in Europe, Ideal, Bism, Swish, and the coming EPI and SPA. These are all account-to-account payments. So we want to look at that. And Gijs is going to look at it from the bank side and Ralph from the TPP side. So, Ralph, why don't you start us off? I know you're a big fan of this.
Yeah, well, no surprise there. So account to account is what we've done from a TVP's perspective all the time. And maybe worthwhile mentioning that I'm not sure what was first, because Ideal was pretty early in this, and I think probably before. So the bank started doing this before the TPPs came up, but it is both almost 20 years ago, 15 more years ago. So yeah, so we have been in account to account in Europe for quite some time. So for the last, I guess for the first 10 years or so, it was a bit of a rivalry there between the bank owned or the bank contracted versions, what we used to call online banking e-payments, OPEPs. So Ideal being the showcase example, but there has been Charopay in Germany, EPS in Austria, MyBank, and in Poland, PayPal Link. Many of those were there, and then on the non-bank side, it was exactly what the early PISPs have been doing. So Ford in Germany, Trustly, later on Tink, and all those. It used to be called an alternative payment method. And with cards being like the standard payment method, but I think it has grown and it has really caught on in some countries like Holland, but not so much in others. Like in Germany, was always had a relatively low market share, but it has its quite some advantages. So if you are, I think it is the most efficient way of moving money from A to B if you do an account transfer. And the reason why we had cards and wallets coming up was because these account transfers were not done in real time. Initially, years back, it was settled in 2 days, 3 days more than with SCT or SEPA credit transfer, stipulating next day settlement. But it took a day. And you need to have, especially for retail payments, you need to have real-time guarantee, some notification to the merchant that the payment is done or will be done, is guaranteed. So for cards, we know this is this 2-step process where you have an authorization and reservation of funds first, and then you have the settlement later on, but then that just happens in the background. And for wallets, it's also similarly an overlay where, especially for those, 3-corner wallets, like a PayPal, where you have essentially an internal transfer, and that's why that it is done in real time. So therefore, you also have that real-time functionality of a wallet payment. And now with instant payments finally coming, we will have not just credit transfers arriving the next day, but we will have credit transfers arriving within seconds. And that provides that guarantee. And therefore, with the settlement becoming real time itself, I think we're there that we don't really need cards or wallets or any overlay on top of the actual credit transfer.
I mean, that sounds pretty exciting. The stablecoin guys might disagree with you that this is the most efficient way of moving money from A to B. They have yet another model, but that's for another episode. But Gijs, you are the champion of how to do this, right? Ideal in the Netherlands was the best example ever.
Yes, well, indeed, as Ralph said, and maybe it's good to roll back the movie a little bit. It indeed, Ideal was really invented because, for historical reasons, the Dutch are not great credit card lovers. At least we're not great credit card lovers. And when e-commerce started coming up in the new millennium, the retailers specifically asked for something, a cheaper payment method than credit cards, because those were the only payment instruments available to make payments in for e-commerce purposes. So, and at some point in time, the setting was ideal. Just a joke between the three large banks that said, "Oh, but why don't we just transfer money from account to account instead of using cards or whatever?" And that's just how Ideal came about. It was a bank solution because it's based on the good old credit transfer, not instant. But as Ralph said, you need something instant, and that was the instant payment guarantee by the issuing bank, by the, let's say, the cardholder's bank. And especially in e-commerce, it's not so much that you want to have the funds in real time, but you have the payment certainty in real time. You want to, yes, the money will come. You have a hard bank guarantee. So as an e-commerce company, yes, I have the guarantee, I will get the money so I can ship the shoes, as we said. So, and even to this day, Ideal is not, the credit transfer is not instant, yet it's still based on the D+1 in the Netherlands. Most of the time there's intraday. So instant it will become instant when it becomes zero at some point in the future. But it was not a real retailer demand. Oh, we want the underlying credit transfer also to become instant. We're happy with the payment guarantee. In the Netherlands, we already had eight settlement cycles intraday, so it was already near instant. So for them, they said, "Oh, we're not going to pay extra to get the money instantly. We want the payment guarantee instantly," and it became hugely successful with many other use cases, also P2P, but also pay by link. You can pay your taxes with it. You can top up anything, your phone stuff, prepaid. It's used for topping up stuff in real time. And yeah, but the tragic was a little bit that even before open banking was there, even before PSD2 was there, we tried to convince colleagues across Europe, guys, at some point in time, you will also need something A2A as an alternative to, let's say, card payments on the internet. But, well, the business model from an issuer perspective might be a little bit more attractive. So, the TPPs had to, let's say, force, and indeed, Sofortüberweisung, Georg Schart and his friends with first screen scraping, and then we fought many battles in the days about that being illegal or not. But it finally led to the banks having to open up their payment accounts for those third parties, which Ralph now represents. And based on instant payments, it really is now a full-fledged alternative.
Absolutely. I mean, I've always been super impressed how smart the Dutch were with Ideal in the pre-instant days to send the guarantee immediately. And that was all that was needed. The merchant just needed to know he's going to get his money. It might be settled a day or two later.
Yep.
The immediate guarantee meant you basically had a thing that looked instant. You had an instant economy even before instant. I thought that was incredibly smart. I mean, nowadays, of course, with instant, you have the real thing. But let me just ask you one thing, Gijs, about that, because I'm sure Ralph will want to talk about the screen scraping in a second. But just before we get onto that, Gijs, a lot of banks in France, in the UK, in the US, actually make a lot of money out of cards.
Mm-hmm.
And isn't there a bit of a dilemma? On the one hand, A2A has all these advantages for banks. On the other hand, they do lose card revenues. How do you see that?
Yeah, that's of course the dilemma, and that's why we never succeeded in really exporting Ideal back in the days. As I said, for historical reasons, the Dutch are not very credit card minded. They want to pay the money they have for goods they need and don't want to live on credit. But in other jurisdictions, that payment tradition or history or culture is different. So if you have it based on card payments, especially credit card payments, the business model from an issuing perspective was more attractive than changing to a lower cost A2A based alternative. Hey, and you can't blame them for that. I mean, it's by the end of the day, banks are commercial institutions that need to make money.
Yeah, but in the end, I think the A to A model will win. There's some people even talk about peak card having been surpassed. But Ralph, I can see you're itching to reply to some of the things that I said.
Well, yeah, I guess there is irony, and if banks would have been so resistant initially in allowing this access, I don't think we would have needed PSD2 and all forcing all the banks to basically come with regulation, come with a stick. To force everyone doing it. And there is another example on this payment certainty. So if all the banks would have used the Berlin Group standard of payment notifications, so that it would have basically told the TPP that if and when the payment is done, and not just initiated, and then we have to cross fingers that it will go through. So if that notification system in the API would have been used, then we would not have had to push, for instant payments, for actually the money arriving in time, because what really counts in retail payment is the guarantee being instant, the payment certainty being instant. Having the money instant, I think even the majority of merchants, I don't think they would even want it, because in many cases they don't even want the settlement the same day. They want it once a week, or some even only once a month, because it's an overhead for their finance department to reconcile and to do all of this. So I think we could have avoided quite some regulation if we had played ball a bit more friendly at an earlier stage.
Yeah, but Ralph, I can testify that there was a real, genuine security concern at the time. When e-banking, internet banking was emerging rapidly, the banks started falling prey to what was called in the days, man-in-the-middle attacks. And let's say the screen scraping modus operandi was sort of a bona fide man-in-the-middle attack from the bank's perspective, because they could not distinguish the screen scraping TPP accessing the account or the customer, him or herself. So, and for banks, it was new. There were uncertainty. It was cyber security was still emerging, and of course there were some competitive concerns as well. But if I recall correctly, it was mainly the security concerns that they didn't fully understand the risks yet. On the one hand, there were already criminals doing man-in-the-middle attacks, and this, from a functional perspective, was exactly the same thing, but then from a bona fide party. But hey, how do you know that as a bank, that somebody accessing the account,
Well,
etc., etc.?
there are solutions to this. I
I
mean, at the
know.
time, it was already, we were very, very, willing to say that, hey, this is my IP address, so this is I'm the PISP here accessing now. It wasn't meant to be hidden, and with EIDAS and certificates, we already have now a solution for it. And in terms of the credential sharing, which I guess is the main problem, that
Yep.
customers would disclose the password. So here we go. Those are your credentials. So you just stop issuing passwords and go biometrics or whatever. Arrive in the 21st century, and then if there are no shareable credentials, they can't be shared. Full stop. It's as easy as that,
I
actually.
know,
But
Ralph, but that it was difficult for banks understanding how this all worked. They have legacy systems. It was new. There were concerns, many different concerns, and the time wasn't ripe yet. And that's why we ended up with PSD2.
When we planned this episode, we said, "Oh, this is going to be a short one." I'm not so sure anymore. I think you two still have some old scars which are still opening up. But I get the impression that the banks are more and more embracing this. I mean, I know that from all sorts of other countries, Middle East and other areas where open banking and account to account is happening in Latin America, in Asia, in everywhere. I think it is an absolutely unstoppable force. Contradict me if you see that differently, right? And also
Yeah.
the card companies are thinking about how to support this model, and there are even cooperation models like IATA Pay, where the banks are working with the airline industry to allow everybody to pay their airplane tickets directly from their accounts, saving $8 billion dollars per year in card fees. I think that's the figure. So, I mean, there are some strong motors happening there towards account to account. Or do either of you have any doubts that this is the future?
No, I don't doubt, but that's you have to distinguish it. Will, let's say, what we used to call the international card schemes, they will also have a chunk of the action, even not card based, because the international card schemes, for which instant is supposed to A2A is supposed to be an alternative, of course, are also moving into that space, and they're just moving money. A transaction is a transaction, be it a card transaction, A2A. These schemes, they don't care, so they will be in that business too. It's not like we're getting rid of the card schemes. No, there will also be big players in the A2A space. We've seen that them buying up infrastructures and so on and so forth, changing the slogans. We move money. We're not a card company. We're not a credit card company. We just move money. Just tell us how you want it.
No, absolutely. I mean, if you
Yep.
look at the acquisitions people like MasterCard have been making all along the value chain just to enable A2A accounts,
Yep.
from infrastructure to
But
service
that's the best
providers.
proof of it will be a success. Otherwise, they wouldn't do that.
Yeah. I mean, they're still called MasterCard, but I think they're moving into
Master money.
a technology company which enables payments and
Yeah.
identity and other things. Ralph, you presumably
Yeah,
also see pay as the future, right?
Yes, I think so too. And it is, well, we have seen huge growth in the card world also in recent years. And it's sort of still, I'm always waiting for when is the tipping point coming. So, but I think it is coming, or it will come. There are just, generic advantages of a push payment versus a pull payment. Because and of course cards were also one of the reason was, but like 50 years ago it was only the merchant side which was connected to a network. Customers were not. So you had to the merchant terminal was the only electronic device in the game, and so that had to basically do the action and then pull the money from the bank of the consumer or of the payer. But now with everyone having their own connection and smartphone, etc., you don't need that. And having a push payment has many advantages. So for starters, you are typically not having a chargeback need. Coming from a merchant's perspective, so typically no chargeback. Also, you're not getting the customer's data, so you don't have to protect it, because most merchants never really wanted that customer data, that card data, which then they have to invest a lot of money of securing it. And when they get hacked, they have big fines for getting hacked and GDPR fines, etc. So it's a great advantage from a merchant's perspective, not having to deal with that data. And of course, from a consumer's perspective, well, I get the merchant data, so I can push the money. So, and I don't have to give away my data, my details, so that he can then pull it from me. So it's a much better privacy. You could argue that, well, with the chargeback here, there is a question mark. But then if the money is not just pulled at some point in some time from my account, which I can't really control, and if I have to use an SCA, if I have to strongly authenticate the payment, there is actually no much need for a chargeback. And so therefore, the downside from a customer perspective, I think, can also be handled differently. For example, like payer protection or some, mechanisms that could be part of a scheme then as well. So I think it has really only advantages.
Yeah, well, it's a funny thing. So within the closed ecosystem of Ideal, there never was really much need for a chargeback, because there was so much trust in the ecosystem that even if we didn't want that, Ideal became a trust mark, and retailers would gladly push a payment back to a customer that was complaining, or that the defective goods received or whatever. So let's say that the hygiene was in the ecosystem, the onboarding of merchants and the behavior of merchants, and customers really trusting, if I make an Ideal payment, of course, if something goes wrong, I will get my money back, even if that is not part of the scheme rules and there is no rules. But it was just sensible behavior of the participants, and you can do that in a small country with a relatively small ecosystem. At the pan-European scale, you probably have to organize that differently, because one of the things, I'm not sure how much time we still have, is how do we then scale up this account-to-account thing to a pan-European scale, because we never succeeded in creating pan-European card alternatives. The question is then, will we succeed in creating pan-European account-to-account based alternatives?
And there, of course, brings us to EPI and a few of the other developments, because a
Yeah.
number of the things that you two have been mentioning about branding and about trust and about refunds and disputes and everything, these are all in a scheme which sits on top of a sort of instant payments mechanism. And that's where these things like EPI and others come in, which listeners can, of course, see in other episodes. Now, my guess is the cards will be with us for still a while. So there are some projections it's going to be a few years. I would go for 10 years, if not more. But I think the future is clearly there. So unless either of you two have any burning issues, I would say we're gradually approaching the end of this episode. And hope the listeners found this insightful as always. And you will see all the connections to the other things that we talk about in other episodes, which I hope you will also enjoy. So thank you very much for watching. And thanks again to Gijs and Ralph for being so lucid on yet another topic around payments.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.